Good afternoon, everyone. You're all very welcome to today's US market open as we approach the US Open following the Bank of England interest rate meeting this morning. And of course, the all-important Fed meeting last night. So what have we seen over the last 24 hours? Well, we've seen volatility. We have seen the Fed cutting rates by 25 basis points. Every man and their dog on Wall Street was expecting it, going from 4.5% to 4.25%. So the current rates in the US is 4% to 4.25. And of course, we've seen a similar action by the Fed, out of the Fed. And as we move into the Bank of England, we've obviously seen the Bank of England keeping their rates at 4%. So the voting members today voted in line with consensus. Of the 9 voting members, 7 voted unchanged, 2 voting for cuts. So that's coming in as expected. Now we've seen a little bit of a kickoff in the last hour or so in the dollar. This was the dollar moves last night. We had that massive aggressive wick down, followed by a fairly resilient and gradual recovery. Now this yellow area was really borne about by the fact that we talked about it quite prominently. A weekly area for the DXY was going to be very, very crucial in determining whether we actually went bearish and through it and continued moving lower like we discussed on Tuesday, or if there would be like a preemptive buy the rumor sell the fact scenario in the dollar whereby we sold off and actually the follow through wasn't really sustained. And that's kind of what we've seen, and more visibly on those lower time frames from session to session. We had that V-shaped bottom, almost truck and trailer like formation where that dollar went aggressively higher, closed stronger into the close, and from then we've actually made new highs, subsequent pullback this morning, and that dollar has got a second bat of strength. So really from here it looks all set for that dollar to move back up into that 97.50, more progressively probably up into low 98s from where we saw that price action really unwind from last week. Now we know markets are twofold. Sentiment and indexes and markets will move simultaneously. There's always going to be that residual battle between buyers and sellers. We saw very, very heavy selling initially last Friday into the early parts of last Friday week into last Monday, and then of course we saw a similar action this week where markets obviously turned quite negative Monday into Tuesday, forming a midweek reversal, and of course we're on our way back up. So really what we're seeing now is we're seeing that cable move. It was very aggressive obviously at one point very much yesterday, but again when you look at that cable move we saw that aggressive wick, and I think for me this is a really ominous sign. Markets obviously grinding higher, aggressive move, unwind, back down into that 136 handle, secondary dead cat bounce recovery, back up really into where that initial sell-off came from yesterday evening, and of course we sold off from 136.50 this morning. Now the narratives will be that Bank of England maybe indecision or whatever caused it, but actually when you look at the price action and the volume, we can actually see that inside there was a lot of clear price action structure. You can even see it yourself, inside out reaction, and markets are starting to turn lower. So at this point I would still look for cable, probably a little bit more maneuverability to the downside. We've broken back under this daily short-term top. Now this would have been an inverse head and shoulders if you look at it that way, inverse, a broader right shoulder so to speak, coming back down. But as we've broken back underneath that 135.90, 136 handle, it's really a case of, do we see a daily closure underneath that today? If so, you'd actually expect probably more downside progression, and that 135, you could nearly take it in 50-point intervals, 135.50, 135s, and maybe even a potential run into this 134.50, because there's been a lot of volume. If you were to ascertain and just evaluate price action on cable over the last few weeks in particular, you'd see that there's a lot of volume here between 134 and 136. 135 is the midpoint where there is a lot of volume, so do not be surprised if you were to see further slide on cable in that regard. But of course, let's see if things happen, and that's going to be on the provision that the DXY obviously continues moving higher. In addition to that, before we move into the equity markets, we can see a similar type of scenario in euro-dollar, right? Because euro-dollar had that aggressive, this was the previous channel as we talked about previously. I just temporarily removed it, but allowed it back in. This is what we had drawn last week and over the last few weeks. We got the breakout. We got that aggressive break up, we got a pullback, we got that secondary extension into the early parts of this week, aggressive move into Tuesday, we formulate new highs at 119, it's not sustained, we get that reversal, and then of course what happens from there? Massive wick last night. Delving into the shorter time frames, we can even see it breaking down, getting a short-term low, corrective movement back up into the prior day value area, which was around that 1840, 1850 handle, and you can see today we've come off that 1848 at around about the same time as The pound started selling off into the Bank of England, and since then it too has been on the back foot. You'd expect probably a similar scenario now of euro dollar getting into those low mid 117s, 117.50, maybe even down into 117.25. So let's see what happens there. It's up. That move would be on the provision that this dollar strength actually continues to progress higher from where we're at, and really seeing that move back into that back into that 97.80, 98 handle, at least in the short term. And that's all we're really doing, is mitigating a lot of this bearishness. And we talked about it last week. We talked about it on Tuesday. The last time the Fed cut rates in September of 2024, we had this sort of reaction here, and that was really the start of this dollar increasing strength. If you want to go back to 2017, 2018, like we've talked about previously, when the Fed was increasing rates then, almost a similar type of scenario. And that really begs the case that if we are to get successive weekly closes and bounces off of that 96.50 handle, is that the dollar bearishness over? And I think that is the key question over the next kind of few weeks or so, because we have seen last year equity markets rose at the same time the dollar rose. We saw it in 2017, 2018, despite the chopping back and forth. Both seem to move quite well over the calendar year. So just because the dollar is moving in strength doesn't necessarily mean that equity markets is going to be corrective. Now, we know obviously seasonality factors are important. We know how progressive these equity markets have been in September, so there might be a little bit of a short-term knee-jerk reaction, but overall let's just wait and see if that becomes a little bit more systemic into Q4. And of course we are still a couple of weeks away from that beginning. So from my perspective, weekly close in the DXY is going to be critical. We've seen the narrative. I am short cable personally this morning. I got in the shorts around 136.50 as this inside bar was starting to fade. Once we'd gotten back below prior day value area, which was around about 136.45, I'd actually a short. So I was a short from those mid to low 136.40s. I'm really looking for this to segment lower through the course of the session. So let's see what happens on that front. There's a clear logic, clear structure. DXY increasing in the background is important. Simultaneously along with that, we've seen the volatility curve, right? So this is important as well. Last night, VIX obviously spiking off initially during the day. We got back into it, into the highs, into the FOMC. We sold off aggressively between 7 and 7:30. That managed to migrate lower, and of course that segmentation in the weaker volatility curve allowed these indices, albeit quite volatile, but by 8 o'clock, half 8 last night, we had a very clear idea of where sentiment was going. And of course by, as I said, 8-9 o'clock last night, markets were back above the value area and were grinding higher again. Now I suppose the only problem is last night that 15 short-term volatility, it laboured. It was very volatile, depending on whether you're on the options side, you're in the futures or the CFDs. There was a massive battle last night just above and just below the 6600 levels. On the futures, I believe it was around 6650. So there was obviously going to be that continuation and battle of short-term sentiment. We were initially bullish. We faded very, very quickly. And you can even go yourself to the 5-minute charts last night just to kind of reiterate how volatile this market was. We had that initial spike on the 7 o'clock news. In fact, you could actually see it into 7 o'clock. There was a little bit of a spike. It was very, very quickly unwound. And then, of course, we navigated lower. And, of course, that was the V-shaped bottom. Once we'd really gotten back above and segmented above this 6600 handle, as I said, by about half 8, it was clear to me that the likelihood of us actually breaking lower and progressing systematically back down into the 65s for tomorrow's options expiry didn't really appear ominous. And then, of course, what have we seen since then? Markets into today's session has continued to grind higher to a point where we've actually extended into the European and Asia sessions higher. We've apexed up again today, this morning, all the way back down to value area. So it'll be interesting to see. European and US markets have taken these stock markets higher in pre-market, but it'll be interesting to see what happens at 2:30. Do we get a break of today's value area? If we get a break of today's value area, you're really looking at this 3-4 day range between 65.80 benchmark lows, which we visited yesterday, and more prevalently around that 6600, 6610, where we traded Monday, Tuesday and Wednesday. So that's really worth watching today. I think there's going to be a continuous battle. I think this week is going to be very choppy. We saw it yesterday. The cleaner moves really was last week, that preemptive buying into FOMC. This week, as I said, has been very, very choppy, very apexing, very up and down. A lot of indecision initially last night. Shorter time frames give us a little bit more clarification. And then, of course, today, apex up and down. So the only thing I would say is short term, the dollar is rising quite aggressively this afternoon. Will that mean that we actually turn a little bit risk off short term? We know that the S&Ps, the NASDAQ, has been very overextended in the first couple of weeks of this month, which is uncharacteristic for September performance. This was the September lows. This is where we are today. So it wouldn't really be remotely surprising that we actually broke through today's value area around that 66.30, 66.35 on options, around 66.50 on futures, and actually move back into where we were trading at last night. And that for me would be the interesting move, because of course that's segmenting a little bit more of a tick up in volatility, which we've obviously seen. Again, we've seen a pre-market this morning in today's trading session. Likelihood is we get a gap fill, potential, but could we actually get another short-term spike to undo this sell-off in vol that we've seen last night? And of course, if that was to happen, you would absolutely be looking for this S&P index to move lower on the open, through the open and into 3 o'clock. And you'd probably expect the same in the NASDAQ, where we come back down another couple of 100 points. Now again, on the NASDAQ, it was a little bit more progressive. We had that breakdown. Initially, yesterday, we had that move back into the value area. We had that dunk off, didn't sustain at 24,000s, 24,100s, and of course rallied aggressively back into the value area. Now for me, this is what's ominous, right? Because of course we come up, we reject, we break down, fails to sustain. So of course these long tails suggesting that any sort of selling was very, very quickly bought back. This was reinforced by the fact that price action broke above the value area, came back down to retest, held above it, and then of course into the close 11 o'clock last night, we actually saw the NASDAQ repeat what we've seen in the S&Ps to a point where it's actually gone up into the 24,500 range. Now the only thing is, I would say, is with the NAS, it's actually below value area, whereas the S&P is trading at or slightly above value area. So the volume profiles on the two are slightly different today, but obviously something that you should be looking out for. Now given we've grounded higher, we've obviously a lot of vol here, aggressively moving up, breaking through, coming back up, really now on the impulse into 2:30, 3 o'clock, first 30 minutes of live trading for the US cash market open. It's really, how does a price action react up here? Is there potentially an inside tail where we come up, we reject, and we start to dunk off back down into here? That could be a potential scenario, but as I said, it's going to be ascertained by how the volatility curve opens up at 2:30. Now the volatility curve has gapped lower. It's left from last night's close, obviously finding bottoms in that 15 range. We're trading slightly above 15. It'll be interesting to see if there is a progression into 3 o'clock on the VIX curve to kind of undo a lot of this volatility that we saw last night. And I think that's going to be the formulating bias to get confirmation. And you can bring in all your other bits and pieces, your bells and whistles or whatever that you formulate. But I think from a sentiment perspective, that is going to be crucial for the likes of the S&P, for the likes of the NASDAQ, because the last thing you want to be doing is going long on the NASDAQ from here for it to do something like this. And that would be particularly the case, as I said, if that VIX curve was to spike up, you'd be looking for this type of move on the NASDAQ. So let's see what happens there. DXY still grinding higher on the session. We're up to 97.40, which is really undoing a lot of Tuesday's selling. So Tuesdays and Wednesdays lows have been pretty much taken out, and as we see that cable price, it's continuing to segment to the downside. So from that side, the bias is clear. Dollar is ticking higher on the session. The volatility curve is finding bottoms in those lower bounds around the 15 handle. It'll just be a case of, does that materialize for the likes of the S&Ps to become corrective, the likes of the NASDAQ to come corrective, and the likes of the Wall Street, which has aggressive moves yesterday. It too has already started undoing it, and you'll already see that the Dow Jones is trading at where we were trading at yesterday's value area, but more prevalently, this was the 7 o'clock print last night at around about 46,000. We're back to 46,000 again. So despite all the volatility last night up and down, despite all the pre-market buying this morning and the selling into the open, we are back to where we were at 7 o'clock last night. So that's why it's important to take a step back, look at actually where we are within the price structure, and that will help you mitigate a lot of the short-term noise, a lot of the short-term volatility, a lot of the algo trading, and allow you to actually put pieces of rationality and common sense logical thinking on the price action, as I said, as we move into the US Open. Now, on the DAX side of things in Europe, we know the DAX broke through those market lows from August. this morning. Aggressive moves on Tuesday. We found a little bit of a corrective move back up today. This was really the area that I was looking for, that 700, 750 range for potential selling opportunity. Very consolidated, aggressive breakdown, taking the lows, segmenting back up, and you can kind of see we're a little bit short of that as you look at the volume profiles. Now again, on the session, if you were to look at the volume profiles for the DAX over the last weeks, we talked about this range. We've broken down, formulated lows, short-term move, impulse, and we are kind of a midpoint. So really for me, if I was looking at selling opportunities, I'd like to see a reaction from somewhere around here. If you were to look at the wider scope of the DAX over the last few weeks, a lot of volume is held in this wider area here, this secondary move. So you could probably see it as a just about scenario, but for me, I was looking for a little bit deeper up into the retrace, so there was no trade there for me in the DAX. But if you took anything, fair play. In terms of the FTSE side of things in Europe, very choppy, very back and forth, obviously with the Bank of England. I actually thought with the pound selling off today and this segmented move lower in cable, I actually thought that the FTSE might get a little bit more of a deeper leg higher, but I think that's purely because of the VIX curve increasing this morning into the afternoon, and a lot of these highs in the likes of the S&Ps and NAS and Dow and DAX have been fairly subdued. So I think that that's probably a move, a consolidated move in sympathy. But if it's a thing that the volatility curve doesn't sustain, doesn't progress higher and actually moves lower back into this range again, well, that might be a play if the pound continues to sell off. There might be kind of a secondary move on FTSE. But when you look at it on the session, fairly mundane price action, very back and forth, not much of a material gain for the upside of FTSE. So interesting to see what happens there. Still stuck between 9200 and 9250 short term, or a little under 9250 in the short term correction moves. BTC for me was an interesting one last night, moving across, aggressive impulsive move higher, back down yesterday. We formulated the lows, we kind of held underneath the value area, and then as I said, into later last night, got that incremental break. From there, it's through Asia, straight through, back up into all-time highs, just shy of 118. A little bit of a corrective move today. And of course, buyers are still in control on the BTC side of things. So that for me would have been nice today if obviously that apex. So we've consolidated, we've broken up, we've created pullback, we've broken up again, second new high, to create another impulsive move back into that 115.50, 115.17 lows, 116 midpoint, and actually see if we would go from there. But ultimately that hasn't happened. We've been fairly flat, consolidated, and we've seen a little bit of buying into the open. And then of course Ethereum, similar scenario, off of that 4400 again, aggressive move into last night's close, like with BTC, consolidated above 4550, 4560, and is now back above 4600 as we move into live trading for the US session. So crypto hasn't been too affected. Equities is holding on quite well, considering obviously the increase in the vol, increase in the dollar. So obviously there's no reason to fight that. There's no clear selling bias yet on the S&Ps. It's just a case of something that may develop into 3 p.m. and more broadly beyond that as we progress into the US session. But for me, the bigger moves is that strongness, or strength should I say, in the dollar. We've gone from 97.20s into 97.35s a couple of minutes ago. Now we're up nearly into 97.50. So that dollar has definitely been taken home, and this is definitely moving lower. So this is going to be a winning trade for myself. It's just a case of how deep in those bounds does it go. Okay, and that'll be something to watch out for in the afternoon. Euro following the same protocol, and obviously the cable, as we move out of cable and euro into gold. And this was really what we talked about Tuesday, right? We had this apexing move up, we had that volatility yesterday, we had that spike on gold, triggers the highs. So for me, this is just a clear trigger stop hunt, right? Because of course it's creating short-term highs, it's creating flagging structure back down into this volume area here in yellow, this deeper yellow shade. And of course this spike yesterday is instigating, it's trapping buyers into the market, thinking that this market's going to go higher, when incrementally we trap, we sell off, we dump, and it's stop hunting. Short term algo, prime function liquidity, and then from there it's continued segmented move back into this value area where we formed lows. A little bit of a dead cat bounce today, but of course with that dollar strength comes gold prices moving back into those lower bounds, of which we're testing at 36.40. So really the thing here is that if we were to break this area here, this short-term yellow area here, which is on this black broken line at around 97.60, if we were to really see a strong closure today where the dollar closes back above some of this. Now I'm just going to empty the chart for a second. So really this area here around the black line. A strong daily close back above could actually springboard a little bit more of a deeper retrace in gold. But you have to remember, gold has been hugely desirable. It's been hugely overbought. There has been a lot of impetus, like we talked about the beginning of September when we had that break, the retest, and that massive drive from 3,400 to 37. We could very easily get a little bit of an unwind because, of course, we've had fairly clean buying impetus, as I said, from the end of August through to the middle of September. It wouldn't be remotely surprising if we actually saw another $100, $150 retrace against some of that liquid buying, profit taking, fundamentals maybe pivoting slightly, and of course seeing that break. So interesting to see how that was. I don't trade gold personally. For me, it's way too volatile with a lot of unknowns. Unless you're really watching it, unless you're watching the auctions, it can be quite tricky. And it's not an asset that I've ever really liked trading on, so I've obviously stayed away from it. But from an analytical perspective, you can see how that rotational weakness to strength in the dollar, at least today, has factored in on gold prices, and that'll be something to watch as you move through the course of the session. I think at this moment in time, you could very easily see lows being taken out in gold, retest these structural lows around 36.20, and I think if that gives way, you've kind of got that kind of aggressive breakdown where you're probably going to slide into the mid 35s and then look for a dead cat bounce, right? So dead cat bounce recovery, maybe looking for a short-term impulse, and then that would be the phasing out. But at this moment in time, it's only a hypothetical, hasn't developed, and is far from execution at this point in time. So of course, keep an eye on that one. All right, so that's kind of where we're at. S&Ps is starting to slide now through this area here, this area around 63.20 into 63.40. I think personally we're probably going to see the equity slide. NASDAQ, the short-term buy-in, very, very quickly undone. You can kind of see it here yourself. Short-term buying. We've seen a little buying initially on the 235. We've now seen it segment into 240. I think this is probably going to continue moving lower through the course of the session. So keep an eye on that one as well. For me, the logical scenario is back to last night, like what we've seen with the FTSE play. So let's see how that segments into 3 o'clock. As I said, DAX and FTSE have kind of taken care of themselves, as too is the crypto space. Interesting to see if that was to turn negative, particularly at those session highs. That obviously changes the game then for the likes of BTC and Ethereum to potentially make those lower bound moves, of which we talked about earlier in our analytical play. All right, so where does that leave us for the rest of the day? Well, obviously FOMC is done, Bank of Canada is done, Bank of England is done, BOJ is up next tonight into tomorrow morning, leaving rates uncut. All eyes really on policy statement and of course press conference tomorrow at around about 7:30 a.m. and that'll be really geared towards JGBs, and of course that brings in more the economical side of things. So that for me is going to be one to worth watching in that regard. And of course tomorrow we've got German PPIs, we've got UK retail sales, and we've got a few bits out in the US as well tomorrow. But other than that, it's been a volatile week. Let's see what the price action develops into 2:30 through 2:30 into 3 o'clock. We're 13 minutes into the open, and it's really a case of seeing how does that develop and segment into the course of the session. You can even see it as well, getting a little bit wicky here in the NAS. So I'm short cable. I'm not going to add more positions yet. I really want to see how this dollar play segments through the afternoon. For me, this is the big one. We're now up into this 97.60, so we've come all the way up to where I'd like to go. As I said, from here, it's a case of do we break that yellow area that we drawn out and discussed a little bit earlier. All right, and that for me is around here. So let's see how that one segments. A strong daily close would be beautiful. Even a close above 98, even better. Because that really hammers this cable price down back into this prior range in yellow that we've been trading on for the last number of weeks. All right, so other than that, folks, as always, trade safe. Any questions for those in the community, please do let us know. Other than that, as always, just mind the risk. We're conscious of obviously the volatility side of things. Markets are moving constantly, changing on a dime. So that is obviously something that as traders we need to be conscious of, but it's important to segment, look at these moving parts, and look to see where the volatility curves are extending in the midst of all of that. All right, have a good afternoon, everyone. Trade safe and have a great day.